Welcome back, everyone. Next up, we have VOX Royalty Corp. It trades on the NASDAQ under the symbol VOXR and on the TSXV under the symbol VOX, and is a returns-focused mining royalty company with a portfolio of over 60 royalties and streams spanning 8 jurisdictions. The company was established in 2014 and has since built unique intellectual property, a technically focused transactional team, and a global sourcing network, which has allowed VOX to target the highest returns on royalty acquisitions in the mining royalty sector. Since the beginning of 2020, VOX has announced over 25 separate transactions to acquire over 50 royalties. Please welcome its CEO, Kyle Floyd. Welcome, Kyle. How are you doing today?
Anna, I'm great. It's great to be back with Emerging Growth Conference. I think we have an exciting update for investors and excited to launch into the presentation.
Wonderful. All right, call me back when you're ready for questions.
All right, will do. Well, first off, I'd like to point everyone to our forward-looking statements disclaimer, so appreciate if you do read through that. And for those that don't know VOX and haven't seen us present before, we have been on the Emerging Growth Conference presentation slate a couple times, but I'll give an overview on why VOX exists and the solution and the problem that we believe that we solve. First off, we were a purpose-built company to solve the problem, which is it's very difficult for generalist investors to find the right kind of exposure to commodities and find leverage exposure to commodities. And in our experiences as both investors and advisors and working in the royalty sector for many years, it was very apparent to us, me and our team, that royalties were what we believed the best way for investors to get the right kind of exposure. We believed it offered the best risk-adjusted returns in the commodity sector. And so we really focused our business on how do we solve this problem for investors and how do we continue to build a business that's going to create excess value and accretive value for our shareholders. And I'm pleased to say that we have built that type of business. We've continued to be successful in driving excess returns and creating that value for shareholders. But it was really at the start, and the foundational concept of this business was to solve that problem for investors, to be disciplined around that and grow competitive advantages that allowed us to find excess value in the commodity sector around the royalty world and that landscape of assets. And the reason or some of the evidence of that is royalty companies have outperformed. There are very unique qualities of royalties that have driven the outperformance of royalty companies. And I think it's important to note that royalties have outperformed both the general indices of mining companies and the physical. And physical actually tends to perform better than the mining companies. So for investors looking for the right kind of exposure, I believe royalties are a very good concept for investors to be familiarizing themselves with and potentially to be investing in. And so owning royalties gives the royalty holder some specific attributes that I think are very profound and often not completely understood in terms of the asymmetric upside that royalty owners are rewarded with, and so much less downside. And so that asymmetry really stems from we're receiving a top-line revenue interest in terms of that's what the royalty generates for VOX. So we take anywhere from, call it 1% to 3% NSRs on average for mining operations, and that's individual mining operations. And so we get a top-line percentage interest in those assets. So when the mine generates revenue, we get paid anywhere from usually 1% to 3%. The really great thing about these interests is that they're not dilutable interests. So when the mining company goes and raises equity, that percent of revenue is not diluted. And so one of the really big drawbacks and potential risks in owning individual mining companies is that cash flow per share that you're hoping to achieve is often diluted significantly after the mining companies raise the money to bring the asset in production or do what it needs to do from a capital expenditure standpoint. So we eliminate a lot of that dilution risk. Secondly, we're not contributing any of the capital, nor are we exposed to any of the input costs. So we don't fund mining companies, not in terms of originating royalties or through owning the royalty. So we're able to operate a very capital-light business that leverages the expenditure of other businesses to produce metal out of the ground. And so it's a very, I would say, elegant structure for us, the royalty holder, in that we're participating in the upside without having to contribute capital to obtaining that upside, and nor are we diluted when we don't produce that capital into the operation. And it allows us to generate the upside exposure to exploration upside, production increases, and all of that is compounded by higher metal prices. Meanwhile, we can run a very capital efficient operation or capital light operation with a diversified suite of assets in a very, very scalable business model. And so we're able to provide that leverage to precious metals at very good entry points. And that's a function of our ability to really locate asset valuation discontinuity that we can take advantage of in the right structure of owning great royalties. And so when you look at the performance of royalties, this is what's generated the outperformance of royalty companies. So these are case studies or examples within the industry. So Franco-Nevada's Gold Strike asset is probably one of the most prolific royalty examples out there, where Franco-Nevada was able to buy this royalty for about $2 million. It's generated $1 billion worth of revenue to them, and it likely has another $1 billion worth of revenue to go. It's these assets that can really increase the optionality within royalty companies, clearly increase the value of royalty companies alongside of that. These are the type of opportunities that we're hunting for and hopefully sourcing all over the world. And the growth within these particular assets really comes down to expandable ore bodies. And there were future discoveries that probably were not priced in at the time that the royalties were acquired. But again, for very little capital, these royalty companies have had prolific returns generated from great asset buys. And so our business is built around trying to find and locate those assets at great valuations in a systematic and repeatable approach. And so we've built very distinct competitive advantages in our sector that allow us to accomplish that systematically and repeatedly for our shareholders. One of those fundamental competitive advantages that VOX Royalty Corp has the benefit of is we purchased what is the world's largest proprietary database of third-party royalties in 2019, started working with in 2017. And since 2019, we've completed more individual third-party royalty acquisitions than anybody else in the world. And I'll pause there to kind of, I guess, illuminate a concept within VOX. We buy third-party royalties. We do not fund mining companies. We have so much third-party royalty deal flow and opportunity that we're not pulled into what we believe is a very deleterious returns and investment process of investing in mining companies. Mining companies, as we talked about, very capital-intensive businesses, very esoteric challenges that go into really funding mining companies that need capital. And you're really pulled into a very competitive process where you're not just competing with all the other royalty companies, you're also competing with everybody that wants to provide capital within the capital stack to develop in mining companies. So it ends up being, very, very thin return type of prospects for royalty companies operating in that sector, which is where most other royalty companies operate. So we are very focused exclusively on buying third-party royalties or royalties already in existence. And that allows us to take advantage of our database, which gives us insight into forgotten royalties, unknown royalties, and royalties that are outside of the competitive forces of the industry. And so that competitive advantage, along with putting a technical team on the front lines of our business, it might sound basic, it might sound like common sense, but believe it or not, a lot of the royalty industry operates with only financial executives or quasi-financial executives on the front lines of their business. And these assets are very, very unique. They have a very esoteric slate of risks and also opportunities that what we did is we put technical people with deep technical experience on the front lines that could ascertain these risks very, very well because they have fundamental mining experience and also extensive experience in the royalty world and landscape. And so that allows us to understand assets better and look for opportunities where we can value assets in the favor of our shareholders and find those types of opportunities. So our process is really event-driven, where it's our technical team looking for interesting developments on mining assets all over the world, and then going into our database to find royalties that are unknown, forgotten about, outside the competitive forces of the industry, and then reaching out to sellers to see if we can strike a deal that makes sense for both parties. And so that process allows us to stay out of what we believe is a deleterious returns game in terms of originating streams and royalties, and allows us to really cherry pick great projects with great catalysts in front of them. And we're seeing the benefits within that portfolio now after many years of employing this business model on a very disciplined basis. As I mentioned, one of those key pillars of our competitive advantage is this proprietary database that we started working with in 2017, bought in 2019. It was a company called Narrow Royalties Online that founded and built this business. And those two founders came and joined VOX officially in 2019. That's Spencer Cole and Rihanna Easterhusen. The benefit of the database is it really allows us to unlock a tremendous amount of value in finding and sourcing royalties that our competition and most of the world is just unaware of. And so the ability to take what was hard copy data going back decades ago, where that data really is not readily available now in present times, gives us this long-standing competitive advantage that we continue to increase. And the evidence of this is that we've bought royalties from some of the most obscure royalty holders you can imagine around the world, from a doctor in a village, remote village of West Africa, to family offices in South America, to prospectors in the bush in Western Australia, to corporations or companies that you wouldn't expect to hold royalties as well, like hearing aid technology businesses, automotive parts companies, and telecom companies as well. And those are just who we've transacted with or had LOIs executed with. That doesn't count the countless groups and eclectic groups all over the world that we haven't come to terms with yet on royalties. And so you see the benefit of us being able to find these forgotten about uncovered royalties or covered royalties in many respects that the rest of the industry doesn't have insight into. And you're seeing that drive value in terms of our purchase price and entry price into fantastic royalties that have immense catalysts in front of them. So I noted that a lot of our process is event driven. We're looking for opportunities where there is an asset that has a fundamental catalyst in front of it or event in front of it that's going to change the valuation landscape of these assets in a royalty context. And so I won't walk through each of these examples, but there is a tremendous track record of our business being able to find these assets and then acquire these assets pre-very material, essentially developments that unlock a tremendous amount of value for our shareholders. So we're buying these royalties at great value for where they stand today, let alone the developments that we expect to occur on these assets in the future. And so we have a very active royalty portfolio of assets that are realizing these types of events and catalysts for our shareholders. And what really underpins that value equation for us is that we're able to leverage expenditures by the operating partners on these businesses. So we're very fortunate to have a great cadre of mining companies operating these assets, spending a tremendous amount of capital and resources to advance these assets, and we're buying a percent of the revenue at fractions of the relative value that these mining companies are spending. And so there's extreme leverage that we are able to generate for our investors in terms of our capital light and very disciplined focus on finding these types of opportunities that create this type of compounding interest in our favor. And where you see kind of what I would call the headcount light, expenditure light, capital light business is, we are a much smaller company than some of these majors listed on this graphic on the right, but we're generating revenue per head well in excess of what these companies are generating that have been around for, in some cases, decades. And we continue to see operating leverage continue to grow throughout the business. So I expect these numbers to continue to grow. And it really kind of pinpoints that our business has this capital light operating leverage that it inures through our model and our disciplined focus around that model that we believe really benefits our investors and creates asymmetric upside with a lot less downside. And so the evidence of that is really in the results that we're driving for our shareholders. A couple major developments that VOX has realized over the last 12 months. We came out with an inaugural dividend that was in September of 2022. We've since already increased that dividend by 10%. And we've gone from one producing asset in 2020 to 7 producing assets as we currently stand today. And that is really crystallizing and driving a tremendous amount of revenue growth. And most of those assets were bought pre-production. So we bought assets pre this real, tangible crystallization event that is increasing the revenue for VOX at a very significant pace. Meanwhile, our share price and our net asset value per share has not kept up with the growth of our business. And so I think there's an inherent opportunity there for investors that are taking the time to learn and evaluate VOX Royalty Corp. And then one overarching comment I would make is we're focused on accretive growth. we are focused on how do we grow the value of the business for our shareholders on a per share basis. We don't look at growth for the sake of growth. We look at value for the sake of our shareholders and making sure that's increasing with every transaction that we do. And we have a tremendous track record in doing so. Quick overview on our capital structure. I'm pleased to say that management owns a very significant portion of this business. It is also some of our very hard-earned money that's been poured into the company. We are very, very passionate and very aligned with our shareholders in terms of maximizing long-term shareholder value, which I think is very important, especially in a business where there are very significant capital allocation decisions being made all the time. We look at everything through the lens of shareholders first and foremost. And that really aligns us in terms of creating value that we think will generate excess returns for our shareholders over many years. We have a very strong balance sheet. I believe that we have one of the most unique royalty portfolios in the market. About 80% of our assets are in tier 1 mining jurisdictions of Western Australia, Quebec and Ontario, in Canada, and in Nevada. So that equates to about 70% within that jurisdictional mix. And I think that's really interesting in that we have been able to find tremendous value in Australia. We're seeing, our competitive advantage probably, is evidencing itself as the strongest in Western Australia. And it turns out to be what we believe is the world's best mining jurisdiction, and the Fraser Institute backs it up as ranking it #1 for investment last year. What you'll note is that our portfolio is very precious metals heavy. That's really a function of that we are able to find more forgotten gold royalties than probably any other type of royalty in the world. And so it's more opportunities for us to find and create value. And you'll also note that our expected growth in producing asset count is very meaningful over the coming years and should continue to drive revenue growth for our business. As noted, we have the second largest holding of hard rock mining royalties in Australia. Franco-Nevada is the leader. It's always a good stat when you're second to Franco in almost any category. But it also is where our competitive advantage is the strongest. We believe it's, practically speaking, the best mining jurisdiction to own royalties. And so we continue to have an advantage there that we leverage for the benefit of our shareholders. And you'll continue to see development stage assets in Western Australia, I think, advance beyond expectations, a function of a couple of things going on that are particular to Western Australia. One, you have great rule of law as it pertains to precedent over royalties. You have a very, very good workforce where the economy still really values mining in a way that some of the North American markets don't. You have world-class geology, fantastic infrastructure. And what you're seeing is, with gold being at near all-time highs in terms of Aussie dollars now for about 4 to 5 years, most of these operators are very well financed and well capitalized to continue growing their business. And we get the compounding benefit of that growth without having to contribute capital there. So North American markets, you see a little bit more of a discontinuity between, say, small cap mining companies being able to finance their growth. And when that financing is available to them, those windows are much shorter, where Western Australia has, and Australia overall, has a very consistent track record of financing their junior mining companies as a benefit to some of the, let's call it, structural investment mandates within Australia. You'll note that within VOX Royalty Corp, there's a tremendous amount of organic growth. Our assets are growing every day without us spending money on those royalties. So we have a portfolio of over 60 royalties. That royalty portfolio is growing in value every day without us having to spend a dollar. And so some of those material developments are assets obviously coming to production, but also assets expanding. It's one of the things that we look for, particularly, is assets that we think have an expansion profile in front of them, where we can be buying the royalty pre those major catalysts. And we are, in fact, seeing that play out on many of our operations that we own royalties over that are currently in production. And so a lot of the growth that's in front of us that we expect to realize over the short term is just a function of expansions being realized that will grow production and in turn grow revenue. So while we believe we've driven the most accretive growth in the industry over the last 4 years, we still trade at what I believe is a very significant discount to many of our peers. We continue to find and create excess value on a systematic and repeatable basis. Meanwhile, not being valued in line with many of our peers. So I believe that as we continue to grow the business, as we continue to execute on the business plan with discipline and focus, that you will see VOX move to the left of this curve in terms of relative value basis. But that being said, we never built this business to trade or necessitated this business to trade at a relative premium. There are a lot of royalty companies that exist only to capture arbitrage. Our business is built very differently. We are finding deep value in the royalties that we buy. We're doing that systematically and repeatedly. And so ultimately, we will continue to create value for our shareholders. We don't need to trade at a premium to NAV to do so. We don't need to trade at 100 times cash flow to do so. We will continue to be able to create excess value for our shareholders within our current valuation range, where we're able to buy royalties at fractions of their NAV in very small multiples of future cash flow. And so that will continue within our business. But I will say, I think there's a huge opportunity for us to move left in terms of the relative value of the business. So why VOX, why now? I believe that we are exactly in the right place at the right time. Our business was built for these types of, let's call it macroeconomic climates. There's a tremendous amount of volatility, not just in the markets, but also in metal prices. And what we're seeing is a continued high, what we believe is a very high metal price almost across the board, especially within the matrix of commodities that we have exposure to. And so that creates a compounding interest where we're seeing cutoff grades get lower as metal prices rise. It's bringing more ounces and more tons into the mine plan, all compounded by that higher price. And those are all pure profit ounces or metrics of production for VOX Royalty Corp and our shareholders. Complementing that is a tremendous amount of investment that's being spent on these assets. Last year alone was over a few $100 million spent on our royalty-linked assets. More than 200,000 meters were drilled, and we're continuing to see those numbers this year. And so the organic growth within our portfolio is increasing every single day. It's certainly, in our opinion, not priced into the valuation of our business. And that's something you're going to continue to see. Also to note, of recent, we just uplisted or graduated, as our Canadian friends call it, to the TSX from the TSXV. That was a great milestone for our business, something I'm really excited to report. The TSX has pretty stringent qualifications to be listed on the main board in Toronto. So it was always a goal of ours, and really pleased to report that we qualified and we now trade on the TSX, not the venture. And look, as we continue to kind of look forward for VOX Royalty Corp, what's driving value? It's that underlying growth of our assets. We will continue to find very, very accretive royalty acquisitions, but the market's not giving us any forward-looking credit for future opportunities, the royalty database, and our ability to continue creating that value. We're not getting value for the royalty portfolio as it stands today, in our opinion. So we think there's a tremendous opportunity for investors as we continue to grow the revenue, grow the cash flow of the business, and continue to bring in really exciting royalties to our portfolio at great valuations. And so I believe the business is in fantastic position. We're excited about the direction of the business. We're excited, albeit it's a very volatile market out there for investors. We think we're a very unique business in that we're not exposed to the inflationary pressures, yet we have immense growth in the business, and that operating leverage inflection point is really at an attractive level for current VOX shareholders. So excited about the business. With that, Anna, I will hand it back to you for any Q&A.
Great job, Kyle. We do have some questions for you. Starting with, what is driving the anticipated growth in VOX revenue that you mentioned for 2023?
Yeah, it's really interesting in that a lot of that growth is actually being driven from expansions that are presently taking place and have taken place, say, over the last couple of quarters. And so the trailing nature of our revenue, we believe, has not been priced in. So that the expansions of some of our key producing assets is really driving a lot of that growth. And then also coming in alongside that are a few new assets that we expect to be in production that are in construction presently that will also be driving some additional growth to our revenue.
And so what are some of the developments you're most excited about in the coming year?
Well, the portfolio is really robust in terms of projects that are either the flagship asset or a very meaningful project for a major mining company. And so they're seeing a lot of attention and focus. So Bowdens is a great example of a project that we're expecting to have a construction decision over the next 12 months. It's Australia's largest primary silver project that's in development. And so that's one that we're looking forward to. And then tagging alongside that, new assets coming into production like Mount Ida, and then also new resources being announced, increase in resources being announced, feasibility studies coming to market on some of the assets that we have royalties over. So it's kind of a smorgasbord of good news from our operators that's being produced over the next 12 months that our investors are nearing the benefit from without us having to spend the money or resources on those. That's all driven from the fact that we bought assets very selectively that we believe would have these value unlocking catalysts in front of them. And so we're definitely benefiting from a very robust portfolio of assets that have some material catalysts that are underway.
And Kyle, are you focused on any commodity at the moment? And talk a little bit about the pipeline of some future opportunities.
Yeah, and we really don't, I guess, kind of shift direction with the winds. There are certainly royalty companies out there, and often is the case that there's groups chasing whatever the, I don't know, quote unquote, hot commodity might be. Our process is actually, it's very disciplined around looking for value and making sure that we're finding value. We're somewhat agnostic within the, I would call it the hard rock mining space. And we are finding deep value. It just so happens that a lot of that deep value is found in gold, where if you look at transactions that are clearing the market, I would say there's a premium placed on gold royalties. And so we're able to find very deep value across the spectrum of hard rock mine commodities. And what we're focused on is value and geology. So it's much more about that than it is, maybe hunting or focusing on exclusively on any one metal.
Eugene Norman says he loves the royalty business. So where are you geographically, and what's your competition like? Plus, are you seeing any bidding wars?
Well, Eugene, we agree. We love the royalty space as well. I think our full-time team of 6 would probably agree with you. We're royalty nerds, and so the really unique thing about our business is we are outside of the competitive forces of the industry. There are absolutely bidding wars at any time. There's usually a couple private equity deals in the market. There's a couple, royalty sales process outside of that going on. And for the most part, almost every transaction you see executed in the sector on a third-party royalty outside of VOX is a shopped process. That being said, we have not won a competitive process to bring in a royalty to date. And, when we look at our pipeline, that continues to be, our opportunity is that we are in the uncompetitive waters. We have the competitive advantages that allow us to navigate outside of the competitive forces and drive excess value for our shareholders as a result. And so one of the places that our competitive advantage is the strongest, we have 3 Aussies on the team that are all technically backgrounded. And, when you combine that with our database being the strongest there, and what we believe is the best mining jurisdiction for holding royalties, that all compounds into a very unique competitive advantage for us to continue driving value and finding that value for shareholders. And so we're very, very excited about our portfolio globally of royalties, and probably even, a little bit more excited about what we have in Australia and the growth that we're seeing in that market for us, both in terms of what's already in the portfolio and what we hope to come as well.
Fred Fitzgerald wants to know, do your agreements give you any power in terms of operations in these companies?
The great news is we're not an operator of any of these mining operations. So, our royalty agreements typically give us audit rights. They typically give us some oversight in terms of understanding what the operation is doing, but we don't get involved in the operation of any of the mining companies and don't have the power to dictate how they operate the mine. So I would say that's 99% positive. The only 1% negative to that is, we do rely on, picking good assets with great operators, and then those operators continuing to execute their business plan and advance their assets. So, we're not in charge of that, but, we don't want to be in charge of that either and have, all the, everything that goes alongside of operating a mining asset.
And Pete says, aside from the public vehicle, are you taking outside investors? And if so, how is that percentage valued versus the shareholders?
No, so we're fully public company. We don't take outside interests. We don't have participating partners. It's, the only way into VOX is by buying shares in the open market, and therefore then owning a piece of the business and the royalties that the company owns.
And Dan Jackson, it wants you to clarify. So you're pitching VOX as an alternative to investing in commodities directly through stocks. And what commodity exposure does VOX currently have, and which commodities now and maybe in the future?
Okay. A lot of questions all in one, Anna, so you might have to bring me back if I don't answer all of them. But look, what we believe VOX is the best risk-adjusted opportunity within the commodity sector. That's why I built the business. That's why we as a team have come together. We believe that royalties present asymmetric upside with a lot less downside. And so, are there, it's not pitching it versus those opportunities. We believe that we're a very unique opportunity to realize excess returns around commodity exposure. So it doesn't mean that any of those investments are wrong, but we believe that VOX should be evaluated as, in many ways, a very unique business that has a unique model with competitive advantages around finding value. So that's what we focus on. That's how we believe that, why we believe that we are a very interesting opportunity for investors. But yeah, not here to tell you not to own physical or not to own mining companies. I just believe that we have a very unique business that was really purpose-built to create excess value within the commodity sector for investors looking for that type of exposure.
Great. And Nick wants to know, what resources are you invested in a percentage basis? Can you break it down? What, gold, oil, other metals?
Yeah. So within precious, I would say about 70 to 80% of that is gold. The rest of that would be a combination of silver and platinum group metals. So platinum, palladium. And then within non-precious, you're looking at iron ore, you're looking at copper, you're looking at zinc, and vanadium. And that's kind of the basket. But most of our exposure, if you had to pick one metal on a net asset value basis, is gold. But again, that's really a function. We like gold, but we're really not price forecasters. We're price takers. In fact, we're pricing backwardation into our models when we're pricing assets. So, what we're looking for is what we believe are expandable ore bodies that can be bought at great value with great royalties over those projects.
Kyle, last question, just due to time. Caroline Chef says you currently have less than 10% institutional ownership. So what are you doing to increase that number?
Yeah, look, it's interesting. Not all of our institutional shareholders actually show up on a trackable register. So I would say we're actually doing very well on the institutional front. Certainly, I think we can generate more awareness both institutionally and with retail. But I would tell you that the institutional front, we're probably doing better than we are, in terms of, having general awareness within some of the, call it retail markets around the world. So we look at it in terms of combining both, but, we are certainly allocating some time and resources to more investor awareness within our business.
Wonderful. All right. Well, we are out of time. We do have more questions for you, but we'll send them to you so you can answer on your own. But we would love for you to come back in the near future with some more updates.
It'd be my pleasure. Thanks, Anna.
All right. Thank you, Kyle. Stay with us, everyone. We'll be right back with our next presenter.